Folks, this is how we do this. She has done the best single cheat sheet on ESG I have seen. You're going to trot out to all of Bank of America, your present customers, your future customers. You're going to put this sheet in front of them. What's the single message of how ESG is not a vogue, not a rage, but it's going to be permanently good for you?
Absolutely. No, I thank you for that intro. And, I think this is the most important work I've done as a research analyst. But really what we're finding is that ESG is not just a nice to have kind of, feel good set of metrics, but it's actually a mandatory input into everyone's investment process. It doesn't matter whether you're an ESG investor or not. We found that there are material risks that you can signal from looking at these types of
You got a bunch of second-rate people here. Subramanian, Yo, Hall, Wade, McAdam, Kwan, and Bonilla. You've lined up a heavyweight financial team to talk touchy-feely ESG. Pull it back to the accounting and the dynamics of 4 accounting statements. Where in those 4 statements does ESG work?
So where it works, it's interesting. If you think about the United States as a service economy, and when you think about the biggest cost that most companies have, it's labor. So it kind of makes sense that if you have a happy, well-trained, safe workforce, you'll have lower earnings risk, you'll have, better ROE, you'll have just a more stable company rather than hiring new people and training them. So all of these different aspects actually drive the bottom line of companies. And what I think is really interesting is that this is not some new exercise that investors are doing. These are things that investors have thought about since day one.
But Savita, it's been slow.
But,
has it not been slow? And actually, we talk about sustainability, but the transition is going to be painful.
So, I think that it's happening right now because what's happening is that the world is becoming a little less short term. Like, think about it. We're starting to hear, investors like Warren Buffett telling companies, stop issuing quarterly guidance. Forget about the short term. Think about your long-term sustainable growth model and focus on that rather than just meeting earnings or beating earnings estimates over the next quarter. So I think this is really a sea change in the mentality of corporate America. But think about the whole shareholder to stakeholder movement from the Business Roundtable. This is something that's happening everywhere, and I think it's starting to percolate in really meaningful ways. So, what I think is the most interesting thing right now is, and the key message that I took away from all of this research is you have to use these aspects that capture reputation and brand equity, because it turns out that 70% of assets on S&P balance sheets are intangible. You can't even assess them using the normal financial
One final question, just in a busy morning here. Within your research, you've had the courage to look at people that are non-anti-ESG. What's the biggest price for the old guard that doesn't get this?
So I think the big price is that we're seeing a meaningful spread in the cost of capital for companies that are disclosing their information, that are conducting themselves well, and companies that aren't. There's a 30% premium for companies that are quote unquote good versus bad.